In today's video, I am going to be sharing with you a simple strategy on how I trade news. Everyone knows that news release, most especially CPI and NFP, are one of the news that moves the market the most. And so many traders do not understand how to trade news. So that is what I'm going to be sharing with you in this video. So make sure you stick to this channel, subscribe, turn on notification icon to be the first to be notified whenever I publish new content, and make sure you like this video. So what I normally do is I share my trading experience with you guys so that you will understand how forex trading works. And what I focus mostly is technical analysis and psychology. So today we're going to be talking about news, how to trade news. Everyone knows that during news release there are so many panic, and that is why the market moves randomly. But if you do not have a strategy on how to trade news, you might end up losing your account if you don't have stop loss, because during news release the market is highly volatile, most especially gold. So CPI simply means consumer price index, while NFP means non-pay farm rule. So what happens when these news are released? It affects the forex market, most especially the pairs that have the USD quotes, such as Euro USD, GBP USD, USD CAD, USD JPY, SAU USD. So these pairs are affected the most whenever these news are being released. There are so many news that are being released in the forex market, right? But the CPI and the NFP are one of the news that moves the market the most. And CPI is released every third Wednesday of the month, while NFP is released every first Friday of the month. So the last CPI news was released on the 15th of May 2024, while the last NFP news was released on 3rd May 2024. So what I would advise you is, when I finish this video, you can go to your chart, you can go to your trading view or MT5 trading chart and do a back test of what I'm sharing with you in this video, so that you will understand what I'm talking about. So whenever you want to trade the news, the first thing you need to do is to go to what we call Forex Factory Calendar. This is the website that always bring out microeconomic news. So Forex Factory Calendar is where you can go to see the latest news. So the sign that always indicates a strong news is when you see a red sign behind that news. This indicates that this news is going to move the market very well. So whenever CPI news is being stipulated at the website, you normally see the red sign, especially CPI and NFP, because these are news that moves the market the most. NFP can move over 200 pips, while CPI can move over 200 pips in a single minute. You can see why I'm saying these news are very, very powerful. So now what we're talking about right now is how to trade this news profitably. So I'm going to be sharing with you my simple strategy, which I used in the previous CPI news and NFP news, and it was sniper. It was sniper. In fact, when I backtested that strategy, I was so shocked because so many people do not know this, right? That is why whenever news is being released, so many traders will just be gambling with their money, because if a news is released, the price can move more than 100 pips in a single minute. So the panic is what moves the market. Sometimes before the news is even being released, the price has already moved because of what? The panic. And that is what people do not understand. So what I do is I tend to generate profit from the panic of people before the actual movement begins. Now, if you check the data of NFP and CPI, you can see that the data always explain the same thing. Now, when you look at the data of NFP, right, we have what we call the actual, the forecast, and the previous, right? So when the forecast number is higher than the actual, or let's use actual first. When the actual number is higher than the forecast, it means that the US economy is strong. It means that the USD is going to rise. The same thing applicable to both CPI and NFP. They have the same explanation. When the actual of CPI is higher than forecast, it means the USD is going to be strong. The same thing applicable to NFP. When the actual of NFP is higher than the forecast, it means that the USD is going to be strong, and it means that the USD will rise. So what I normally do, because I trade gold, SAUSD, that is the pair that I trade. What I normally do is 5 minutes before the release of the news, I always go to the website to check. So throughout that day, I don't normally place a trade because I'm just waiting for that micro news. So I don't place a trade throughout that day until the news is released. So 5 minutes before the release of the news, I always go to the website to check to see what is going on. So in Nigeria, the news is always released at 1:30 p.m. both the NFP and the CPI. That is Nigerian time. The news is released by 1:30 p.m. So when it is 1:25 p.m., that is 5 minutes before the release, I always go to the website and check to see what is happening. So once I see, I will look at the previous data, that is the previous data of the NFP and CPI, to see how it works before I cannot take action. So for the fact that I now know that whenever the actual is higher than the forecast, I know that the USD will go up, which means the gold will drop. So now I'm looking at the data to know whether, if after the release of the news, the actual number will be greater than the forecast, or if the forecast number will be greater than the actual. So this is what I'm looking for. So many traders make the mistake of placing a trade before the release of the news. That is dangerous, because if you place a trade before the release of the news, it is very dangerous, because 1 minute after the release of the news, you don't know what will happen, because in that process the market will move so fast because there's panic in the market. So you don't know whether if the price is going up or going down. So placing a trade before the news is dangerous, because you don't know whether if it's going to go up or it's going to go down. That is the fact, because sometimes the price can go down, collect so many stop loss, and then start heading up. Can go down, collect so many stop loss, and then start going up. So it is better you relax and wait after the news is released for you to take action. That is the best way to trade news. Wait after the news is released before you can take action. Don't place a trade before the release. Wait after the release before you take action, because if you place a trade before the release, it's just based on luck, because just based on luck, the market can go in your direction based on luck and you make so much money, or the market will go against you and you lose so much money. So the best thing is to have a strategy on how to trade news. So this is the strategy. What I use is RSI, Relative Strength Index. RSI is an indicator that is used to measure overbought and oversold condition of the market, right? So the number are from 0 to 100, right? And the RSI line consolidates within those lines. And for the fact that during news release the market or the price moves so fast, I tend to rely on the RSI because it gives me a good sniper entry. So what I do is, when let's say 5 minutes before the release of the news, I plot out the RSI. I plot out the RSI indicator. For those of you that doesn't know how to do that, you can go to my previous video. I think I've shared some tutorial video on how to plot RSI on your chart. So you simply go to indicator, click relative strength index RSI, and it will pop out. So what I do is I don't use the default setting. I do some touching, I do some adjustment on the setting, but the 14 period still remains the way it is. What I normally change is the oversold and the overbought. So normally the default setting is 70-30, which is 70 is the overbought while 30 is the oversold. So what I do is I make adjustments on the settings. I change the 70 to 80 and I change the 30 to 20. So it means that overbought is 80 while oversold is 20. So that is how I do my settings, but the period still remains 14. So after the settings, I will now relax and then wait for the news to be released. Right? This time around, I won't rely on the data anymore. Right? I won't rely on the micro news data, the data that will be displayed at the Forex Factory website. I will not rely on the data. What I'm relying on right now is the RSI indicator. So once it is time for the news to be released, let's say once it is 1 minute before the release of the news, I will simply go to 1 minute time frame. Because I trade gold, I will simply go to what? 1 minute time frame, and then make sure that I'm on 1 minute time frame, right? 1 minute time frame. Once the news is released, you will see, in fact, before the release of the news, let's just say 30 seconds before the release of the news, the price will move. Most especially gold, right? Like if you check the previous NFP, which happened on the 3rd of May 2024, and the previous CPI, which happened on the 15th of May 2024, you will understand what I'm talking about. 30 seconds before the release, the price will move, right? The price will move. So in the previous NFP, just 1 minute, the price moved 250 pips. While in the CPI, just 1 minute, the price moved 200 pips. So now, when I discover that the price has moved 100 pips and above, I don't rush to place a trade, right? I only look at the RSI line. What I'm looking at is I want to make sure that the RSI line, which is the 14 period line, touches the overbought condition if the price is going up, which is the 80% mark. Right? So I don't take action until I'm 100% sure that the price or the RS line has touched the 80% line. That is, it has entered overbought condition. So I make sure that the line is touched, the 80% line is touched. That is when I can confirm that the market has entered overbought. That is when I can take action. So once the RS line touches the 80%, which is the overbought, right, at the 1 minute time frame, I will immediately place a sell trade. By that time, the market must have moved 250 pips or 200 pips. I will place a sell trade and make sure my stop loss is at least 40 pips. In case if the price moves up a little before heading down, it will not hit my stop loss, because if I have a tighter stop loss like 20 pips or 15 pips, the price can just move up a little, hit my stop loss, and then collapse down, and this is going to get me angry. So for the fact that I don't want my stop loss to be triggered unnecessarily, I extend it a little bit. 40 pips is okay. So that is what I do. So my take profit is going to be 100 pips. But what I normally do is I make sure that my take profit is above the 20 EMA, because I will also make sure that my 20 EMA is still in place, because all of you know that I trade moving average crossover, so all the time my 20 EMA is always on the chart. So I make sure that I take my profit before price gets to the 20 EMA, because that is where price tends to receive support. So I do the calculation, I make sure that I place my take profit 10 or 20 pips before the 20 EMA. So that is what I did in the previous NFP and in the previous CPI. And what happens? The price collapsed down, hit my take profit, and then tend to receive support at the 20 EMA, just as I predicted. So the price received support from the 20 EMA, then went up a little and then collapsed down again. By that time, I have already taken my profit. So what I'm saying is this: in that 1 minute, the price moves based on reaction of trader, not based on the data, just based on reaction. So I'm taking profit from people's reaction. It is after 1 minute, 2 minutes, 3 minutes that the market can relax and the actual movement, the real movement, will now begin. So I tend to receive profit from the reactions of people. That is why I always place my trade using 1 minute time frame. And whenever the price enters an overbought condition, which is the 80%, I know fully well that the market has gone so far, the price went high so fast, and it's going to drop so fast. So that is why I capitalize on the RS line, because that is what gives me the signal. Some traders might say, okay, for the fact that the price has already gone 100 pips in 1 minute, they will say, this market has traveled too much, let me sell. I'm talking of those that doesn't have any indicator or any strategy in place. They are just trading based on what they are seeing. The price can travel 100 pips on gold. They will say, this market has moved so much, let me sell. And when they place a sell trade, the price will travel extra 50 pips and maybe hit their stop loss. But why I rely on the RSI indicator is because whenever the price gets to the RSI indicator, which is the 80%, there is absolutely no way the price will not come down, because it has entered an overbought at a high volatility rate, at a faster rate. Just in 1 minute, it has entered overbought with 200 pips. So there is absolutely no way the price will not drop. The price will definitely come out from the overbought condition before the move continue. That is why I tend to place my take profit before the 20 EMA at the 1 minute time frame, because I know that is where the price will tend to receive support before the uptrend continues. Like if the data release signify that the US economy is bad, or the actual is lower than the forecast, which indicate that the US economy is bad, telling us that the market will go up. So people will be placing buy trade, right? So I know fully well that the market will go up. So what I do is I tend to receive profit from the panic just 1 minute after the release. So that is why my take profit is always before the 20 EMA at the 1 minute time frame. So that is where I take my profit. So my advice or my assignment to you guys is to go and do a back test of what I have just shared with you in this video. Go to the previous CPI, which was released on the 15th of May. Go to the previous NFP, which was released on the 3rd of May, and do a back test of what I've shared with you in this video, and you will understand what I'm talking about. You can also check previous data like last month CPI, last month NFP, last 2 months CPI, last 2 months NFP, and you understand what I'm talking about. But what I want to let you know is that it doesn't work all the time. It doesn't work all the time, because if the market is in a strong trend, no matter how the price travel, even if the price traveled 300 pips in 1 minute and the market is in a strong trend, there might be a range at the overbought, right? So maybe if the price enters the overbought in the 1 minute time frame and start ranging there, and you know that when a price is ranging, the RSI line will be coming out from the overbought, right? So if the price starts ranging, and the RSI line is coming out from the overbought, it means that the market will go up again, right? So that is why I say there is no 100% in forex trading. That is why I still have my stop loss in place in case if this scenario happen. But if you check the back test, you see that this scenario happens few times, right? It happens few times, not most of the time, few times if you do the back testing, right? But that is why you need to understand that forex trading is not 100%. right? So you must have your stop loss in place. So make sure you go back test this strategy that I've just shared with you in today's video, and you can come back to give me your comment, your opinion on what you think about the strategy. So that is all I have for you in today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Enjoy the rest of your day. Bye.